Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 9th, 2018, and today is Tuesday morning. Looking at the economic events today, nothing scheduled for today, but let's see what's been happening in the markets, starting with the EURUSD. So we saw a nice slide yesterday for the EURUSD below 120. Once we broke this 120 supportish level, it continued to slide down to 119.50-ish level, okay, which is a nice retracement for the EURUSD for a Monday, over 60 to 70 pips retracement. So that's really a nice retracement here. We're coming close to a previous resistance, okay, so subsequent support. So this 119.50-ish level could be a nice baseline for us to find in the EURUSD. Looking at the daily chart, as you can see here, we've hit this level before, 119.50-ish level. So, as long as we're holding this level, we're going to just insert a line here just to keep it for future reference. As long as we're holding this level, I see that we can still bounce off of it and then, find ourselves trading within a new range. It's 119.50 to 120.70-ish level. It's almost 120 pip move, which is kind of decent for a new trading range. Now, looking at the GBPUSD, we didn't retrace as sharply, okay? Now, but keep this in mind that the GBPUSD is not trading as volatile as the EURUSD. So with that said, we can't expect, some big moves on the upside. So we might find ourselves just trading in a tighter range in the GBPUSD. So just keep that in mind as we continue to trade that. Aussie USD, we're still very strong in closing up to this 78-ish level. We're trading at 0.7855-ish level right now, but this can continue going up. It hasn't really retraced down, so I would look for a continued rally here on the upside. I wouldn't get too aggressive about it, but I would think that it can continue going up. Now, looking at the USD Japanese yen, a nice correction from 113 to 112.70-ish level, which is a pretty decent move, but we've been kind of choppy, okay? There's no question that we've been kind of choppy looking here on a multiple chart, and, we've been relatively in a very tight range. I mean, over the past, month and a half, we've been trading between 113 and 112-ish, in a very tight range. So nothing to really write home about, and it seems like it's just, forming a wedge formation here in a daily view of this, but it has its baseline at 112.22-ish level, but making lower highs on the upside. So we may see it correct itself maybe down to the 111-ish level on a longer time period. Okay, but just that's my sentiment. That's my general sentiment when I'm looking at the USD Japanese yen. Looking at gold, not retracing much. 113.18, and we're not retracing much. We're continuing, this nice rally, and we may continue this to pop up here, just like the Aussie USD. So I look for continuation there. Looking at the other commodity, but we follow, looking at oil, 62.23 dollars a barrel. Now this is significant. The reason it's significant is because it's a full candle. It's closing at its highs, and it does look like it does want to take it up above. Okay, so once this pops above this 62, maybe half-ish level, I definitely think we can continue going up to the 65, maybe 68-ish level, in this nice continuation rally. Okay, so keep an eye on that as this resolves itself later this week. Now that's obviously going to affect the USD CAD getting stronger here, 24.35. Okay, we had this nice bounce to 28. This is like a weekly chart, so keep that in mind. But I do think that, if we continue to break this, we could definitely see it going down to 121-ish level as we've gotten stronger in the price of oil. Looking at the Dow Jones, we had a lackluster Monday, okay? A nice rally into the weekend, not much of a sell-off for a Monday. That could be just indicative of the fact that there are real buyers in this, and this may even go higher this week. So keep an eye on this as this resolves itself and continues this nice rally on the upside. I mean, we're looking at a weekly chart, and that's the only way we could really respect this is by looking at a longer term chart. So, again, just buy the pullbacks. You're on the right side, even if, it doesn't work for you initially. So keep an eye on this as this continues to trade and rally throughout the week. Looking at the Nikkei, we've rallied nicely to 23,895. We sold off a little bit more sharply than the Dow Jones, but it does look like it wants to continue. So keep an eye on this as this follows today. If it does continue to follow this rally, we could see it pop up and make new highs again. Looking at the DAX though, we haven't made new highs. Okay, we've bounced up, we've gapped up and continued. It's been kind of choppy in the DAX, but once it goes, it goes. Okay, so that's really the advantage of trading the DAX. So if it does, pop up this morning, it does continue to challenge this upper limit, then we could certainly see, maybe a breakout for a new high for the DAX. However, just remember that this is lagging. It's not a leading indicator. It's not leading the market higher, but it's just lagging behind. So, with that said, just realize that it could correct itself, and we've been choppy. And look at this graph. I mean, this is not a pretty graph. In terms of a trending market, this is a ranging market, and you just have to shift yourself a little bit when you are trading a ranging market to selling the high, which we are right now, okay, and buying the dips. But the reason I'm not inclined to do that is because the markets are breaking out higher. The Nikkei, the Dow Jones are breaking out higher. So with that said, I'm a little hesitant to short the top of this range, or maybe short it a little bit with small volume and see that it does work itself. And perhaps as the week continues, the Dow Jones will correct itself. We'll also see a correction in the DAX and a retracement. So that's what you need to do. You need to look at several factors, the different markets to cue you in as to a directional move. This is Fred Razak. I want to wish everybody a great trading day. Thank you.